Excellent, brilliant content there. Thank you all for participating in that one. And up next, the last session for the day with some great friends of RFIs from Deloitte, Mike Jones and Tony O'Donnell, bringing home this conference, talking about how collections is dead, but long live collections. Looking forward to that session, and I will see you straight after.
Tony, welcome. Thank you for making some time. I'm sorry that we can't be together given the snap lockdown we're experiencing here in Melbourne. But hopefully this session is going to be prepared and superbly edited ahead of the Australian Mortgage Innovation Summit, where you and I have been asked to represent Deloitte and talk about some of the insights we have on our journey together around collections. So I'm looking forward to spending the next 20 to 30 minutes with you, albeit virtually. I guess the first words are from your mouth. Good to stumble already. The first words are from your mouth, so I'll just, I guess, give it a few seconds and then off you go.
Okay. Okay, Mike, you have worked in collections for a long time. You know, some say a very, very, very long time. We've had a lot of the themes in the other sessions explained. Can you talk to us about where collection sits in that conversation?
Sure, Tony. I guess in reality that we are looking at a low rate market. And in times of lower credit growth, the pendulum often swings to focus more heavily on customer retention rather than customer acquisition. And we take that basis point and we throw in a bit of the Hayne Royal Commission. We think about the increased community expectations that arose from the Royal Commission and the opportunity to rebuild trust with customers. Not to mention the simple matter of the increasing regulatory scrutiny that we've observed locally and internationally in the area of collections. And we have to recognize that the collections function typically sits as I guess, as the epicenter of the triage to providing triaging and providing support to customers. And we've seen that over the last 12 months, be that with the bushfires to begin with, and then into droughts, and then, you know, into the COVID-19 health crisis. And that regulatory focus is key, particularly internationally, emerging more strongly here. The need to provide support to customers and the drivers around increased controls, the increased rigor around how we manage the vulnerable customers, conversations with our vulnerable customers, beyond financial hardship into other dimensions of vulnerability. And really that's the key to innovation, or the linkage to innovation. How do we better use our data and the insight we generate from our organization and offer those digital channels to customers who may have maybe what we can say are lower complex circumstances, and really encourage them to use and engage with those digital channels, but also look at use our data to identify customers who may be experience some degree of vulnerability or have emerging financial stress, and really identify them and push them towards a more specialist support function so they can better deal with their complex circumstances. And ultimately that becomes then the overall challenge around collections. How do we better provide and respond to the tension that can emerge between managing for the financial actions, the collection side of the conversation, but also the customer support element of the conversation?
Yeah. And it's certainly been a challenging period for both customers and organizations alike.
Yeah, and there's certainly been plenty of challenges, Tony. You and I have been working together with a number of clients in a number of conversations. And given your experience and many years of experience with transformation and large-scale transformation programs, can you maybe share with the group some of the challenges that you've seen?
Yeah, no, there have been numerous, and there are many, and I think for collections, the challenge, and I think the need to transform. Often it's come out of perception in terms of or misperception of what collections does. And I think also traditionally it's played a certain role as well. I think very much in the past it's played a certain role, and I think that's also played to some of those challenges. So for some collections industry, and the function is seen as really much a down the corridor function, something that happens after the event. The client misses a payment, so yeah, let's chase them for that payment. And then as a consequence, now it's a focus on cents in the dollar, get as much as you can, get that return, and then we're happy. And really, as a consequence, then that's that end of the value chain. They're perceived as distant from the customer. And if that's your perception, if that's a role to some degree collections have played in the past, then the consequences are that when investment is required, collections is not somewhere that comes to the top of the pile. And so as a result, typically there's been long-term underinvestment there. And as we know, increasingly there's been regulatory scrutiny, sometimes as a result, and then remediation events for some as well. So really challenging place. It can be a challenging place, and not a great place, as you know, Mike, to be in that type of situation.
Yeah, for sure. But so certainly a lot of challenges, and I think most people in the virtual room will be aware of those challenges and feel those challenges.
Yeah.
But the contradiction there is that despite those challenges, when you think about how the industry responded to firstly the bushfires, and I mentioned the drought, and obviously the COVID-19 health crisis and the subsequent economic issues, if there are all these challenges are there, why did industry respond so well?
No, I agree, Mike. An absolutely mammoth, huge response, really positive response by the industry. And I think in saying that really enhanced the brand value of financial services organizations. And that's not something that's happened recently in recent past. So huge, yeah, totally agree, huge response. But for me, I think core to that response has been, and the reason for that great response has been the people in those functions. The crisis, as you say, has really has changed that focus now to assistance, now from recovery per se. And that has meant that collections functions and their leaders have really came to the fore. They have that deep understanding of customers, particularly customers facing challenges and in hardship. And then they've been able to understand that, and then bring that together with solutions to really match the customer's needs and the associated risks, yes, of the customers, but I think what we've seen as well play out is of the broader economy as well. So, but for me, that was a point in time, although COVID feels like an absolute lifetime, an ongoing nightmare, but dare I say we're coming out the other side. And I think what we really want there is to supplement that real deep expertise and that real desire to assist with capabilities such as technology and data and analytics that really enable a sustainable and robust solution, not just in the short term, as we've seen in recent past, but into the medium and long term. And for me, Mike, that really requires an investment.
Exactly right, Tony. And another thing, I totally agree about the point about the passion. I've worked, as you kindly pointed out at the top of the conversation, I've worked in collections and recoveries for a number of years. And I've often felt that the people who work in and around collections are some of the most passionate and committed people in the organization. And for me, I think it's great to see them having, to some extent, under difficult circumstances, the spotlight and the value that their function provides to the organization and communities they serve in the spotlight. So I think that's absolutely fantastic.
Yeah, no, I agree. Yeah, passion and leadership from the collection industry is definitely not in short supply. And I think, Mike, we've had really great participation. We've started to write some articles and points of view to really show what we feel the opportunities are in the collection space. And one of those articles we entitled "Collections is Dead, Long Live Collections." Can you maybe for the audience here, explain a little bit more what we meant there?
Yeah, sure. I guess what we're trying to say here, I mean, collections has been a function that has been at the core of recovering the financial losses that an organization is exposed to for forever, really. And I think really, when you think about the last decade in particular, pretty much all collections functions have really moved beyond that language of collections and collect and recover to the words support and assistance and solutions are widespread. So what we're really trying to say is actually be down in the detail. And when we overlay some of the process and data challenges, you made reference to some of them before, many of the collections practices beyond the vocabulary of support and assistance actually look and smell and feel like a number of the practices that have been common in the industry for a long period of time, collections of the past, frankly. And an example of that would be something as elusive as customer level collections. And this has been a concept we've talked about in and around collections for several decades. And it's clear to me that where better practice is globally is that when we're looking to make a treatment decision about a customer, we're looking at our relationship with the whole of the customer. And when we think about things like open data and open banking, then potentially the customer beyond the realms of our organization. However, given the technology and data constraints, we keep talking about these things, it's still not unusual for a collections episode to begin when there's an account level delinquency event, that there's a past due event or a missed payment on a credit card or a loan payment or a mortgage payment. And that's the flag or the trigger when the account is passed to the collections platform and work begins to collect and recover the debt. I think the boundaries of better practice are far beyond that account level trigger for collections. Better practice is absolutely about understanding when there are emerging financial stresses in the customer, or indeed the organization, if we're looking at the SME or business banking segments, and that we look at the customer's entire position with the organization and even beyond, and we assess and we predict or look at the propensity of them experiencing some level of vulnerability. And then we determine the best course of action, and we consider absolutely the whole of the customer in our collections decisions, and before there are any elements of delinquency on their underlying products. And we can take that a whole heap further as well when we think about some of the current practices in the UK, for example. Now, organizations are offering a concept called that we could describe as financial statements as a service. When they're dealing with a customer, particularly in the financial hardship context, they're helping the customer to prepare a set of financial statements to do their income and expenditures. They're certifying that. They're pulling in data from the customer's entire financial landscape within their organization and outside of their organization, and really giving that as a service to the customer to enable the customer to have a consistent conversation with around all of their credit obligations.
Yeah, no, I couldn't agree more. That focus on pre-delinquency and those emerging signs of stress, and I think we saw some of that in the loan deferral program, and also through the assistance through the bushfires as well. So I was wondering, if you could maybe bring to life a little bit further just about those strategic opportunities for collections.
Well, you made a good segue or a good point before, Tony, around the focus on the customer. The collections are often seen as being distant from the customer, but actually it's all about the customer journey. What journey do we want the customer to experience as they come into contact with the collections function, be that in a pre-delinquency, emerging financial stress conversation, or through to actual delinquency? And when we think about that, and particularly the concept of driving a fair and consistent customer outcome, regardless of how the customer enters our processes and exits those processes, that we need to be thinking primarily about the customer experience. And that's going to tip into the data that we're using pre and post delinquency, the systems and the processes. Clearly, we've talked as well about the different challenges of having multiple collections platforms and the context switching that agents can experience. So how do we update or have that focus on the customer outcomes beyond all of those constraints? And really, you mentioned sustainability before, beyond having lots and lots of folk working in these functions, starting to have a transformation agenda, a change agenda to over time move to more sustainable practices. And it's also about the governance as well. I'm sure there aren't many people working in collections who aren't reporting regularly to their senior executives or even the board, but it's about having that constant vigilance and the visibility at the executive levels of the organization, and ultimately making sure that the customer journey that we're looking to promote through the collections function is aligned to the customer, the organization's risk appetite. And that's back to managing that tension between the financial outcomes that are expected in the collections function, but also those customer outcomes.
Yeah, and talking about the organizations there, now we've got a range of organizations on the call here, from the banks, the neobanks, the fintechs.
Yeah.
From a collections perspective, are the challenges and opportunities the same for each of those?
Yeah, that's a really good point, actually, because we've been talking, I guess, more in the sort of the classic banking sense. But when we think about newer market entrants, there's a set, I guess, a different set of challenges. I mean, generally speaking, the newer market entrants will be less encumbered with legacy challenges. They'll have less data issues, and often they can be more agile in how they implement new processes and technology. But at the same time, they have a reduced view of the customer. And I think this is really crucial in identifying emerging elements of financial and other forms of vulnerability. And I think perhaps that makes the conversation more weighted towards the collect element of the conversation rather than support. And if we think purely from a balance sheet perspective, it'll be very hard for a startup organization to have leaned in and offered a large-scale deferred payment arrangement like we witnessed through from the outbreak of COVID. So I really think there's a strategic risk that newer market entrants need to consider. They need to consider the strategic risk as they begin to build scale, or as they're forming and working towards scale, is that are becoming maybe over-reliant on a contingent collection style function, recognizing there are some fantastic contingent collections capabilities in our industry and in our market here in Australia. And of course, it makes great financial sense in those early stages. But perhaps that strategic risk starts to manifest when we think about the customer experience and as we build scale, whether we have sufficient internal capability to, when we need to emphasize the more the support or assistant part of the conversation rather than the collect. I think that strategic risk is something I'd encourage organizations to have a good think about.
Yeah, I agree.
So let me ask you, Tony, we've talked about underinvestment at the top of our session, and we talked about the environment and some of the challenges organizations are facing. And we were on the call with some of our colleagues from the UK just a few days ago, or actually a few weeks ago now, given we're already in the getting towards the end of February, and we were hearing stories about 100% increase in FTE in some of the collections functions. Now, clearly, when we need the FTE, that's understandable, but from a cost perspective and that cost scrutiny that we anticipate will manifest in our market this year, how do organizations manage the balance between short and long-term cost profile management, really?
Yeah. Again, another challenge for our friends in collections, and one we are familiar with. And yeah, I think stepping back, obviously the crises have really positive light on the role and importance of collections. And I think what we're seeing is the possibilities for the future, because I was very doom and gloom earlier with the sort of perceptions and the challenges, but the reality of the collections function is that it's sitting, I use the word epicenter, it sits at that epicenter, a really crucial epicenter of operations, technology and risk, really crucial role to play within organizations. And that's becoming apparent, it has become apparent. They also have that focus on customer outcomes and well-being. Now, terms and phrases that are really important going forward. And yes, they also focus on cents in the dollar as well, but outcomes and well-being really important. So it is not that down the corridor capability. It is very much a strategic capability. So I think now with those perceptions changing from what we've seen in recent months, and also I think the different views on customer indebtedness as well, I think the opportunity now is to reimagine collections. So for me, that then involves, where do you want to play as a collections organization, and how do you want to differentiate yourself? So on the screen now, Mike, it will be familiar to you. This is a benchmark tool that we've used on numerous occasions with a number of clients. And if I'm honest, for some people, they'll say it's a bunch of consulting squiggly lines, but I think you'll agree, Mike, this is a really important tool in the collections conversation. So there's a number of things. I think, first of all, it then says, it enables you as an organization, as a function, to say where do you sit currently across a range of collections capabilities. So we talked about data and tech, but importantly, it's channel customer now through data all the way to tech. So it's across that full range, and there's significant variability typically within the client themselves. But then how does the client then compare to its peers locally? It's a really important comparison, but I think also in addition, how does it compare to global best practice? You touched a couple of times on the globe and what's happening elsewhere, because I think what we're seeing from our clients is they want to look beyond the Australian borders, because they can see what's happening elsewhere. the trends are different and typically ahead in some aspects. Also, the regulatory environment is changing and moving. And I think what we've learned is an awful lot to learn from what's happening more broadly in the globe. So as it's a really important tool, enables you to understand where you sit and then start to think about where you aspire to be. I think what we've also found, Mike, is that it also helps leaders in that part of the organization to start to then have conversations with their peers. We talked about operations, technology, and risk, get them along for the journey of the possibilities. And also it enables you to position to senior execs as to where you are and what the opportunity and the need is to invest and prioritize investment. So I think what we're seeing in Australia is that a real desire to face into the challenge, because there's a gap. There is definitely a gap there. And to move quickly to your question, what can you do in the short term? But I think that's got to be aligned with what your aspirations are and your long-term goals. So what does that look like, short term and long term? And then really facing into looking to close the gap. Not necessarily on everything. For some clients it might be everything, but actually close the gap in those areas that you've identified that you want to focus on.
Sure. And obviously benchmarking in any context can be useful, but what would your sort of guidance be, Tony, for members of the virtual audience who perhaps don't want to start their journey on benchmarking, can perhaps see some lower hanging fruit?
Yeah, I mean, I think there's the benchmarking for more larger end of market potentially, but I think it's engaging in the conversation, it's understanding the trends and starting to work out where do we want to differentiate, where do we want to focus, and then actually understanding what does that look in incremental pieces, and then build from there. Yeah.
So back really to, as we've said a few times now, back to that customer journey and the risk appetite. Yeah, exactly. I agree. Look, I know we can talk about this stuff all day, for you and I, Tony, especially when there's a wine involved. But thinking about innovation and thriving in our current environment, what would your final thoughts be?
I guess final thoughts. Obviously, the last 12 to 18 months has been a journey, a hugely challenging one, but I think a really positive one from a collections perspective. I think, as I've just said, now is the time to understand where you are and really try and reimagine for tomorrow. I think there's an opportunity there. And then I think, I would say, having responded absolutely superbly over the last 12 to 18 months through the crises, the inevitable question will be raised, Mike. The question will be asked, how can you reduce costs, but at the same time, improve sustainability, become more sustainable, be more robust in what you do? And the answer for me is, as we just touched on, is to invest in those capabilities that will deliver against your strategic intent. So how about you, Mike? I'm looking forward to a wine in the chat room later. Closing thoughts from you?
Oh, I think we've covered, there's a whole range of ground now, so we can talk about this stuff all day and get into a whole heap of detail. But I think the key point for me is that collections has been a function that has often been overlooked. But what I've observed firsthand is that how collections functions have mobilized to provide support to their customers, the communities they serve, and frankly, to the Australian economy. I've been humbled to see how much effort has been thrown at this. There's nobody that I've worked with in this industry that hasn't worked long hours over an extended period, and has been absolutely 100% dedicated to getting customers through the challenging times that they're experiencing. I say I'm completely humbled by the dedication of these teams, but it's not sustainable. The challenge now is, how do we shift out of this mindset of this intense operational response and set course for a more sustainable, digitally enabled future state that's aligned to your organization's appetite and your customer experience goals. So pretty straightforward, really.
Thanks, Mike. I think it's time we go for a glass of wine or two.
Tony, thank you as well, and we look forward to engaging in more in the chat room.
Excellent, thank you.
Excellent. Thank you very much, Mike and Tony. And that's it from me, Julian Wilson from RFI. I would like to just quickly introduce a colleague of mine, Lily Liu, who will be doing our closing session right now. But thank you very much. That's all, and I'll see you next time.
Good afternoon, ladies and gentlemen. I hope you have found the last 2 days to be insightful and inspiring. Despite the continuing tough economic conditions, the Australian mortgage industry is working hard to ensure ongoing improvement and growth are achieved through innovation and collaboration while staying resilient. There are also several challenges ahead for the market, especially government and regulatory related issues. Therefore, it is important for the industry to think ahead and be prepared for any future risks that might rise. On behalf of RFI Group, I'd like to thank all of the participating presenters and panelists for taking the time to share their experience and knowledge. Their contribution towards the topics covered in the agenda are truly valuable. I would also like to say a big thank you to our event partners, CoreLogic, Nucleus Software, Elula, Lextech and Purcell Partners, nextgen.net, finder.com.au, Pega and Equifax for their support. Finally, thanks to all of you for taking the time to attend this year's summit. If you would like to review any of the session recordings or to receive a copy of the presentation decks, please fill out the feedback form, which will be emailed to you shortly. For those that have submitted for this year's Australia Lending Awards, the winners will be announced on the 17th of March by email and our ABNF daily newsletter. We look forward to seeing you again at our 13th Annual Australian Mortgage Innovation Summit in 2022, hopefully in person.